Stocks jump after the long weekend with realty and metals leading the charge, even as consumer durables and FMCGs lag. Mid-caps outperform.
Metal stocks gain after manufacturing activity in China expanded for the first time in 6 months, posting the highest PMI reading since March last year. Copper notches the biggest gains.
Prestige Estates gains on inking an over 2,000 crore investment deal with ADIA and Kotak. Upgrades by rating agencies propel PNB Housing Finance, while Hindustan Aeronautics and Torrent Power bag big business deals.
Gold scales to a new high of over $2,250 per ounce on strong household demand in China. Record gold ETF inflows and buying by central banks. Experts forecast more gains ahead.
Hello and welcome to a halftime report. I'm Ekta Batra and with me is Mangalam Malu. Well, what a great start to this week as well as to this fiscal FY25. And this is after we closed up FY24 on a very positive note. It was the best gains we've seen in equities in 3 fiscals. And FY25 has started on a positive note as well, with the Nifty and the Sensex hitting record highs on an intraday basis. A lot of cues ahead, which we will be discussing. So for today, from the US, we have construction spending for Feb, ISM manufacturing data, which is due for the month of March. And on the 3rd of April, we do have the Fed Chair Jerome Powell, who is going to be making a speech. So that'll be important. Back home, we have the RBI policy to reckon with this week. So from the 3rd of April to the 5th. And remember that the repo has been unchanged at 6.5% all the way since Feb 2023. Not that there's any expectation this time, but nonetheless. Hi, Mangalam.
Well, it started with a big bang, right? The new financial year, 2,000 stocks advancing for just about 220 stocks which are declining. Broader markets are extremely strong. Let's see how much of that is on account of, repurchases made by people because of tax loss harvesting, where, they would have sold towards the end of the previous fiscal and now buying on day one of the new fiscal. But nevertheless, it's a big move that we're seeing on all the indices. The Nifty bank has been outperforming among the frontline end of things, and a lot of these broader market stocks as well surging. MCX at the high point. We're doing well on a lot of these commodity names. We did speak about the metal stocks at the start of the show. Some metal ancillary names like Rain Industries, etc., doing well too, along with Coal India. Cement stocks doing well. So it's the first day of a new week, first day of a new month, the first day of a new series, and the first day of a new fiscal as well. On all 4 parameters, the market's doing nothing but doing well for us, delighting everyone. And may that be the case for all of you and your portfolios in FY25 as well. But let's talk about individual stocks. Lupin is one of them which is in focus after the US FDA has given its nod to an anticonvulsant drug. Ekta, tell us a little more about this one.
Well, yes, the reason why Lupin is buzzing today, and it's off the day's high, so it's up only around 0.2%. At one point in time, it was up over 1%. And that is because they've received a US FDA nod for a particular drug, which is basically the generic version of Aptium. It is manufactured at their Pithampur facility. The reason why Lupin is in focus on account of this is that they are the first ANDA applicants for it, and they could be eligible for 180-day exclusivity. The drug is used for seizures. Its market size stands at a significant $354 million. So overall, it could benefit Lupin in terms of sales. But the other stock in focus is Prestige Estates. That stock is higher today. It's surging on the back of a deal that they've struck with ADIA and Kotak AIF. Sonal is here with the latest on this.
Well, yes, the stock is higher in trade after the deal they have entered into with Abu Dhabi Investment Authority and also Kotak AIF, where they will be raising 2,001 crore rupees. The company says this is to capitalize the opportunities that they are seeing in the residential segment. So the projects that they will commission because of this particular deal will be having a gross development value of 18,000 crore rupees. This will be in 4 cities in the state of Goa. There will be Bengaluru, which is an existing market, Mumbai and the NCR region as well. Remember, they just bought a huge land parcel in the NCR region, and that's where they plan to grow. Additionally, Mumbai is the other big market for them. So yes, the street seems to like the plan that the company has in order to grow in these geographies, and that's why the excitement on the stock today.
The excitement on Prestige Estates. In fact, there is excitement across all the real estate stocks. DLF is up around 6.5%. We have decent moves coming in on other names as well. Case in point, something like an Oberoi Realty, and we have seen moves on Godrej Properties as well. But let's talk about another stock, and that's Hatsun Agro, which is up around 3.5% today. And this is our special segment, Insight Edge. This morning, we spoke with the management of Hatsun Agro. Now, remember, this is a company that sells dairy, also sells a lot of ice creams under the Arun ice cream brand, and has started its fresh juice processing in Karur too. The dairy industry in macros are favoring a lot of these stocks, and which is why you would have seen a decent move come by on a lot of these dairy stocks over the last 6 to 9 months. And in that, the company expects their margins to improve by 150 basis points next year. Why is that? It will be the higher capacity utilization and lower inflation in milk procurement prices, clubbed with good demand, will actually do well for them going forward. Not just that, they also have increased supplies coming in and increased presence outside of their core geography, so that would do well for them. We're speaking in summer, so some of their value-added products, the ice cream that I spoke about and curd, have done well as well. And on their balance sheet, there is improvement. They will reduce their debt from about 1,600 crores to 12 to 1,300 crores by the end of June, post the season. And thereafter, over the next 1 year, deleveraging will be a lot more, where they will reduce their debt to less than 500 crores by June 2023. They expect good momentum in both ice cream and curd business, like I said. And the next year, they've set themselves a target of more than 15% revenue/volume growth with better profit growth as well. So let's hear out what the management of Hatsun Agro Products, the chairman R.G. Chandramogan, had to say to us.
We can expect 150 basis point, we can expect it. But actually, the base is now set. Actually, the capacity utilization is also better in all divisions. And the milk arrivals have improved in the last 7-8 months. And the inflation is constrained. So there won't be any issue for us to grow in the coming year without any difficulty. Margins are likely to improve, sales are also likely to improve. Debt will be reducing by June end because of the consumption that we are likely to have and also the demand for the commodities. Debt is likely to come down by June quarter. Right now, almost the same thing is maintained. Around 2025 June, you can expect the debt to come down to 5.
All right, so that's Hatsun Agro. We need to take a short break with the news that the market is in fine fettle. Just look at that handsome advance decline ratio that we have on our hands. Almost 5:1, 4.5:1 to be fair, on the National Stock Exchange. We'll take a short break, get you more on the markets and stocks once we're back. Stay tuned.
Well, as we approach summers, we have a lot of these consumer durable names, typically the AC ones that do really well. So case in point, something like a Voltas has moved higher. That should come up for you. The management was pretty confident of increasing their market share as well. Then we are also seeing decent gains come by on Z on day one of a new series. So typically, the stock spends most of the series being an F&O band. Let's see how this one pans out for them. That's one of those volatile stocks which have been buzzing around. And Glenmark Pharma is the other one, which has moved to the high point of trade as well. But Ekta, speaking about the pharma space, Orindo is up and about in trade as well.
Well, yes. The reason why Orindo is higher today is because they've commenced commercial production at a PenG penicillin facility, along with 3 other manufacturing units. So I'll take you through what exactly they've done. They've commenced commercial production at 4 manufacturing facilities together. So one is at their Kakinada SEZ, which is basically penicillin G. It has 15,000 metric tons for captive usage and external sales when it comes to penicillin G. For glucose, it has 1.8 lakh metric tons for captive usage as well as external sales. Now they have another one which is at their Kakinada SEZ as well, which is called Qul Pharma for 6 APA with 3,600 metric tons capacity for captive usage as well as external sales. And the other one is Eugia Steriles, which is at Tadi Village for 285 million vials for exports. So that is only going to be used for exports. It's a sterile injectable facility. And lastly, Oro Active Pharma for granulated products, and the capacity there is 1.3 lakh for, again, captive usage and external sales. So only one is for pure exports, the rest is for both. And it seems as though, a couple of analysts seem to be quite happy with this development, because they say that Investec, for example, has written on it, and they say that it speaks about the execution capabilities of the company, and two, the new sterile facility, which I alluded to, could help them de-risk Eugia 3, which is the injectable plant that they just had some US FDA issues with, and hence maybe it could negate that issue.
All right, so that's about Orindo Farma. PNB Housing Finance is the other one which is surging in trade as well. Positive commentary coming in from brokerages and an upgrade in ratings as well. Abhishek joins in. Abhishek.
To begin with, the credit ratings have been upgraded for PNB Housing Finance by CARE, which has upgraded the rating to CARE AA plus from CARE AA. Outlook is now revised to stable from positive. Remember that when an rating upgrade is expected by the rating agency, it's turned into positive, and once the upgrade takes place, it's now back to stable. So rating upgrade is being done for instruments like short and long-term bank borrowings, NCDs, Tier 2 bonds, fixed deposits, as well as commercial papers. ICRA has also upgraded the credit rating to ICRA AA plus from ICRA AA that they had earlier, and Outlook has been revised to stable from positive. We have Morgan Stanley, who has written on PNB Housing. They have an overweight rating and a target price of 970 per share. They say that Q4 is seasonally a strong quarter for an HFC with respect to loan growth as well as improvement in asset quality. A valuation of PNB Housing Finance is attractive at price to book value of 1 time FY25 and PE, that is price to earning of 9 times FY25. Back to you.
Okay, well, that's not all. Abhishek, you have a busy day. Brokerage house Bank of America has written a note on PSU banks, which sees a 10 to 20% upside in earnings in FY25.
Well, yes, Ekta BofA has written on PSU banks. The consensus estimate as per them for FY25 is still conservative for PSU banks. So they see a scope for 10 to 20% EPS upgrade, and that is why they are also seeing a 10 to 20% valuation upside for PSU banks, as there is confidence on consistency with respect to EPS and ROA delivery that has improved over a period of time. And foreign ownership has also increased in some of the banks. So they prefer Union Bank of India, Canara Bank, as well as Bank of India, wherein the better risk reward is there in smaller PSU banks on higher growth as well as valuation upside. So BofA has written more on PSU banks. They say that the key stock picks, why they have gone beyond SBI and BOB, the reasons is that EPS expectation for SBI and BOB are already quite optimistic, leaving small headroom for a positive surprise. So other PSU banks are still 1 to 2 years away with respect to EPS recovery or cycle positioning. So this can be a surprising factor for the investors in FY25 and 26 for smaller PSU banks. Foreign ownership in other PSU banks are still half of what they are in SBI and BOB, and that is why they see this room to narrow, and they see upside in smaller PSU banks. So for Canara Bank, Union Bank and Bank of India, they have a buy recommendation. SBI and BOB, they have a neutral recommendation, while for PNB, they have an underperformance recommendation. Back to you.
Abhishek, thanks a lot for that. So that's about the financial space, but it's the first of the month, and that also means auto sales for the month of the preceding month, in this case the month of March, are trickling in. So far we have numbers from a bunch of companies. Sonia joins in with a roundup of all those numbers that have come by so far. Sonia.
Well, thanks a lot for that. Largely the numbers are weak, below what the street was estimating, especially in a couple of pockets like tractors. So let me start with Escorts first, that came out early in the morning. The total Escorts tractor sales are down 16.7% year on year, coming in at 8,587 units. Now, if you look at the breakup, right, domestic sales are down about 16%, exports are down 24%, and the management has pointed out in their press release that the shift in the Navratri festival to April this year and last season's erratic monsoon patterns and resultant low water reservoir levels is something that has hit the demand quite a bit. It affected agricultural sentiment in the central and southern regions, and that is something that has put pressure on the sales this time. Moving on to M&M sales, while the auto sales have seen just a single-digit growth this time, a 4% year-on-year growth is what we've seen. Passenger vehicle sales were up about 13%. Exports were down about 26% for M&M. And the other aspect is the tractor sales, which once again, similar to what we saw with Escorts, M&M tractor sales are down 26%, coming in at 26,024 units. So both M&M and Escorts have reported weak tractor sales. M&M says that the monsoon outlook is expected to improve, and that could boost tractor demand in the coming months. So they're expecting the next couple of months to be better than the preceding ones. Back to you.
Okay, all right, Sonia, thanks very much for that. So that's an update on what's taking place in the auto space. Just want to point out that a couple of stocks such as even Adani Ports is doing well, so it's at a fresh 52-week high in today's trading session, and giving it company is a couple of others such as Ambuja Cements as well as ABB, which are seeing the best levels that they have in the past year odd. We'll take a short break, but up next we'll talk technicals. It's a strong market. Richard Jain will join in to discuss what he's strategizing today.
Welcome back. It's the start of a new series. Like I said, 150 points on the Nifty, doing extremely well. The Nifty bank up around 430 points, near 1%. It's a record high that we saw on both the Nifty as well as the Sensex on an intraday basis. The mid-cap index doing extremely well as well, and that's reflected in the advanced decline ratio, where we have nearly 10 stocks gaining for just one stock which is declining. Let's see where that pans out as well. Importantly, it's the metal stocks which are the toast of today's trading session so far. A big move is what we've seen on Tata Steel and JSW Steel, up anywhere between 5 to 6%. And as the market has moved towards that 22,500 mark, remember it hit a record high today on Thursday as well, which is the previous trading session. We saw some giving up of gains from 22,500 levels. So let's see where that pans out, because that's what's given a lot of these call writers some confidence to go ahead and write the 22,500 call, telling you that maybe levels closer to 22,600 may face some sort of resistance. But at lower levels, support is equally strong as well. So 22,500 put has a premium of close to 120 odd rupees. And a lot of those who are writing that are expecting support to come by near that 22,400 mark itself, 22,375 to 22,400. That's on the frontline index. It will be important to see where the Nifty Bank goes as well, because tomorrow we have the Financial Nifty Services expiry and the Nifty Bank day after. Lot of long positions added on Hindustan Copper. We were speaking about fresh longs added on the metal space. Hindustan Copper doing extremely well. But now it is the start of a new week, new series and new month as well. So let's see where that goes. It's the start of a new financial year, Ekta. So it will be important to track the mid-cap space in the next couple of days, because those who would have sold it for tax loss harvesting, they've bought it back. Will that sustain or not? Will volumes that come back, the next few trading sessions, because it's Easter Monday in a lot of these developed markets today. The fourth quarter quarterly results and updates will come by. This week will be more of updates. The week after would be results. Towards the end of this week, we have the RBI monetary policy outcome as well. And finally, the big one that we're all tracking towards the end of this month, little towards the middle and the end of this month, is the Lok Sabha elections that begin. The first phase starts on April 19th. So it is quite a month.
Yes, absolutely. And it's going to be peppered with earnings throughout. So let's not forget that. That's going to take off on the 11th of April. Well, let's get Richard Jain of 5paisa.com joining in. He's joining in to discuss the technicals of the market. Richard, hi, welcome to the show. It's a strong market. We've started the week, we've started the fiscal, we've started the month on a strong note. So tell us, what would your approach be towards the Nifty as well as the mid caps?
Yeah, hi, very good afternoon, Ekta, very good afternoon, Mangalam. Well, yes, we have started on a very strong note, and if we just look at the expiry which has gone by, then the data is a bit positive towards the end of the expiry as well. The rollovers in Nifty were a bit lower than its last 3 months or last month's average, and if you look at the positions, it seems that all the short positions which were formed in the March series, lesser short positions have been rolled. Just look at the FIS long short ratio. One day before the expiry, it was around 33-34% long short ratio was there, and now it stands around 45%. So although more positions are still on the short side, but the data indicates that lesser short positions have been rolled. And I think if we see this market sustaining above that previous swing high of 22,525, then we should see this short covering or fresh long build up to March to take Nifty higher further. And if we look at retracements, then technically the retracement levels after this hitting an all-time high is coming around 22,700 to 22,750. So I think we should see a continuation of this momentum. There could be some sector-wise churning where sectors such as metals could take the leadership for outperforming in this series. But I think levels-wise, 22,700 to 750 is the range that we would watch out for that could be tested in this April series.
All right. What individual stocks are you betting on? Not just for today, but very near to medium term this series as well?
Mangalam, you cannot miss out on the metal names. Primarily first day of the new series, Nifty Metal Index has hit a new high. Look at the dead risk positions. A lot of long formations are there. So Tata Steel would be my first pick. So ideally, 2-3 names that we are betting within the metal space. One is Tata Steel, then Hind Copper, and even JSW Steel. But Tata Steel, I would prefer on the top, where a high top, high bottom structure has been seen. So one can look to go long with stop loss below 152. So 152 was the previous breakout level. That should act as a support now on any kind of day. So 152, keeping a stop loss below that, one can expect targets around 180 to 182 in this series in Tata Steel. And IRCT is another name which is coming on the buy list. And so primarily because of the long consolidation or correction that we have seen in last 2.5 months, now the price declines did not see any kind of volume-based sell-off. Right, and from its 100-day exponential moving average, the stock is indicating a resumption of the uptrend. So weekly chart indicates a bullish flag pattern. So I think IRCTC also could do well in this series. One can go long with stock below 920, expecting target somewhere around 1020.
Right. Do you have a view on Coal India this morning? There were some chart calls on Coal India as well. The stocks moved to the high point of trade. Not too much as compared to the other metal stocks, but usually moves along with the metals as a metal ancillary.
So if we just connect a trend line, joining the recent highs of mid-February and start of the March, then that resistance is around 444. So I think we need a close above that 444 or 445 mark for any kind of strength to build in for Coal India. So I think it's quite near to that level. So better to wait for a breakout. And if we get a close above that 444, then I think Coal India would also be a good buy.
Okay. All right, Ruchit, we're going to leave it on that note. So Coal India is a good buy. Well, for the markets, Prestige Estate is one of the stocks of the day, really. That stock is spiked up with a gain of around 6% and good amount of volume traction on that one. And giving it company is Vodafone Idea as well, because that stock is showing a good amount of traction on the upside. It's up around 7%. IR, EDA, NBCC, GM Financial, all of them joining the list in terms of gainers this afternoon. We'll take a short break. More on the markets once we're back. Stay tuned. Welcome back. Well, let's talk about another set of stocks. Gas stocks are in focus today on the back of multiple brokerage reports. GAIL is in focus after Jefferies wrote a note on the company, while MGL and IGL are in focus on the back of a Prabhudas Leeladhar note. Sonal is back with us to tell us more about this.
Well, yes, let me start with the note on GAIL by Jefferies, because PNGRB, they have gone ahead and they've issued unchanged tariffs for pipelines for GAILs with effect from 1st April. This goes on till May. The reason that they have not changed the tariffs right now, because there are the other pipelines which will come into force, which will commence as well. So they will issue a revised notification in June with respect to all the pipelines for GAIL, and that's when we could see a change in tariff as well. The current tariff regime, according to Jefferies, is already factored in the stock price, and they maintain they underperform with target price of 150 rupees a share, but the tariff going ahead will be the key trigger for the stock. Now let's talk about MGL and IGL, because there's an interesting note by Prabhudas Leeladhar where they say that electric vehicles pose a big challenge for CNG growth in terms of volumes. CNG sales account for 73 to 75% of total volumes for both MGL and IGL, but sustainability of CNG volume growth from here on has been a concern due to rising adoption of EVs, and that's why they have downgraded IGL to a reduce from hold. They've also downgraded MGL to a sell from a reduce, and the target price as well. China's total gas consumption has grown, aided by residential and industrial commercial demand. They're comparing it with China, where the growth for gas sector is coming from industrial segment, not from CNG or retail segment, and that is something they expect could happen with IGL and MGL as well, because in Delhi and Mumbai or Maharashtra, there's a change in policy as well when it comes to EVs, and that's why they are bearish on the space, and they have downgraded both these names.
Incredible. Thanks a lot for that. Meanwhile, just keep an eye out on Indus Towers as well. Ekta was speaking about Vodafone Idea doing extremely well. There were a couple of brokerages which were positive on Vodafone Idea last week. After a very long time, there was an upgrade that came by. But today we got a note from CLSA as well on Indus Towers, saying that this is one of the best placed in terms of recovery in the telecom sector, and also improvement of one of its key clients. Vodafone Idea does well for their own business prospects. That's about, a couple of stocks which are doing well. But this is our special Value Plus segment where Ekta speaks about Med Plus. Ekta, what's Value Plus in Med Plus?
Well, yes. I'll start with, two sections of their business. First, basically their pharmacy business, which is their bread and butter. They have over 4,600 pharmacies in 600 locations in India. Now, they have just launched a MedPlus brand, which is basically selling generic drugs, but under the name of MedPlus. Now, 85% of products they've mentioned are generic, and that's how the Indian pharmacy business works in any case. Now, stage was set for providing a generic product with quality according to the company, and that's the reason why they launched their own brand. They provide a 50 to 80% discount on the generics MedPlus brand, which they provide. Around 15% of the medicine sold in their pharmacies is already of the MedPlus brand. And according to the management, the realizations are higher for the MedPlus generic brand despite the steep discounts. So they're saying that anyway they don't have marketing costs because it's their own pharmacy. They are providing 50 to 80% discount, and what they are providing the customer is basically a drug which is cheaper and comes with a guaranteed quality. So that's the reason why they're probably seeing this kind of traction according to the company. Now, in terms of diagnostics, remember that they had launched their diagnostics operations a couple of years ago, and this was in Hyderabad. Now, according to them, diagnostics is a new model. It's a disruptor model. They've put their expansion plans on hold when it comes to diagnostics. They announced that in Feb. Now, diagnostics is sensitive to the number of subscribers. That's basically his model, or the company's model, where they provide integrated services such as radiology, diagnostics, etc. And they want to hit the 200,000 subscriber mark before they reconsider expansion. They're 3 to 4 quarters away from hitting those subscriber marks at this point in time. And according to him, according to the management, the closest competitor is not the likes of Dr. Lal's and Metropolis, who have raised prices recently or in the past 1 year. The closest competition, according to him, is someone like a Vijaya Medical, which would be the closest, according to the company, Vijaya Diagnostics. They did not require that much money on the pharmacy side, and that's the reason that they basically pushed forward their QIP plans. They will most likely expand to 600 stores eventually. So that's basically the update which is coming in on the diagnostics business as well as the generics business for MedPlus.
All right, Ekta, thanks a lot for that. That's about MedPlus. Last 3 months down about 7.5%, doing slightly better in today's trading session. Ekta laid out all the details of the business for us on here. But let's talk about taking a short break. But before we do that, here's a quick programming note. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic growth path and evolving dynamics of the Indian market itself. Don't miss out on this. Tune in to CNBC-TV18 just this week, April 4th, 5:30 p.m. onwards. All the luminaries on your screen will be attending and discussing at this event. NTPC has moved higher from the front line end of things. In fact, the Nifty public sector enterprises, the PSE index, has moved to the high point of trade along with all the other PSUs, which are doing well. They had come off a tad over the last couple of weeks, but now bouncing back in style as well. But IT companies, they were in focus all of FY24 because it saw many of them missing their initial guidance range, and then Accenture's weak results further soured the sentiment. Now all eyes will be on Infi and HCL Tech's guidance for FY25, which will set the tone for all IT stocks' performance in FY25 itself. What's the street expecting? Rima joins in with more. Rima.
Thanks so much for that. So let's get to the numbers then. For Infosys, the street expects, and we've got about 5 brokerage notes which are out so far, laying out their expectations. We've got Kotak, Jefferies, Morgan Stanley, MK, and JM Financial, and their expectations are on the screen. For Infosys, the range is broadly between 2% going up to 6%. While for HCL Tech, the expectations are higher. So the lowest expectation is of about 4% at the lower end by Kotak, but it also goes up all the way to 8% by JM Financial. So in a nutshell, 2 to 6% is the possible constant currency revenue guidance by Infi for FY25, while for HCL Tech, it's between 4 to 8%. Kotak says for this year, you expect an improved growth by the IT companies, but not quite encouraging. They have lowered their revenue forecast or the forecast for the entire sector by 0 to 3%. And just to illustrate that point, I'm taking the example of Infosys, where Kotak says that we were earlier anticipating a 6.6% revenue growth for Infi in FY25. Now we're only expecting about 5%. For FY26 too, they were closer to a double-digit revenue growth. Now they're down to 8.7%. Jefferies believe the FY25 guidance is likely to drive earnings cuts. Morgan Stanley has already lowered EPS estimates by 2 to 11%, though they have upgraded HCL Tech, and the reason is better revenue visibility compared to the peers. The street is expecting HCL Tech to clock in higher growth compared to peers. GM Financial believes that if the companies come out with a weak guidance, the stocks could correct, and that will provide an attractive entry point. And just to sum this up, Infosys is actually emerging as a top pick for many of the brokerages. So for Kotak, it's a top pick. Morgan Stanley prefers Infi along with that HCL and TCS. Jefferies has Infi in the large cap space and Coforge in the mid cap space as their top picks. Back to you.
Okay, all right, Reema. Thanks very much for that. Yes, absolutely preparing for all of the earnings which kick off. But TAGA Industries is also higher in trade. This is after Centrum has initiated coverage on the stock. Vamakshi is here with more details on that.
Well, absolutely. It's a quite bullish note that has come from Centrum Broking on TAGA Industries. Like you rightly pointed out, they've initiated coverage with a buy rating. What they are saying is that the company's consumable product offerings provide a very strong growth prospect, and the growth is non-cyclical and structural in nature. Apart from that, there are multiple growth catalysts that could lead to the company outpacing its industry peers. Geographic expansion being one. They are going to commission a new plant in Chile by almost April 2025, and the total sales potential at full capacity utilization from this particular plant is expected to be around 800 crores. They've also incorporated a new subsidiary in Peru, and Peru has a substantial mineral reserve, which in turn provides a significant business opportunity for TAGA. Apart from that, when we talk about the company's market share gains, they have been quite rapid. The market share was somewhere around 5% 3 years ago, and currently it has improved to around 8 to 8.5%, and this market share gain is largely being led by the company's success of Dynaprime. They've also launched new smart product offerings, and these smart product offerings have now moved from the R&D phase to the testing phase, and they will be commercially launched in FY25. So another positive trigger that could come in from there as well. They also see huge scale-up opportunity in McNally's equipment business. They are expecting the company, given all of these factors, to register 18% revenue and 30% earnings CAGR from FY24 to 26. The EBITDA margin profile of nearly 21 to 22% is what they see, and this in turn is expected to drive nearly 300 basis points expansion in return on equity to over 20% over the next 3 years. So a lot of positives out there for TAGA, and on the back of that, we have Centrum Broking initiating coverage with a buy rating target price of 1,625, which implies an upside potential of almost 28%.
Amakshi, thank you so much for that. So that's about TAGA Industries, up around 2.5% today. Again, we are seeing a decent move on a couple of these names. JK Cement, for instance, is the pick of the pack in the F&O space, up around 5%. Hindustan Copper continues to extend its gains, up around 8%. And then when all the commodities do well, it's typically a stock like Vedanta, which continues to surge as well. So that stock up around 5.5%. So that's something that we will keep on our radar too. But earlier today, we spoke with Rahul Arora, who's the CEO of Nirmal Bang Equities, to understand the growth outlook that we can expect from our markets and the indices in this financial year. He also laid out his top sectoral bets for us as well.
Funds are coming in and buying. Demat accounts are continuing to do well. Look at the way Angel One's doing as a stock. SIPs are continuing to do $1.5 billion plus. So all things considered, you may get a bit of a pause, I think, at some stage. But, the way I look at it is, if this government was to get re-elected, I think the main focus now, because most of their agenda on regulation, on foreign policy, even things that have been bordering on the line of religion have all pretty much been taken care of. So I think if this government was to be re-elected again, it will be squarely focused on the economy. And I wouldn't be surprised if the index compounds at about 15-16% over the next 5 years, which basically talks about a doubling of the Nifty over the next 5 years. That's not to say that you won't have a down year. defense had a good run. It had a bit of a correction, but I think there could be some value emerging in defense stocks like Massgaon, for example. I think that looks interesting. I think chemicals as a space, it had a dramatic start to the lockdown. If you remember, these stocks went up multiple times, not in percentages, but then you've had a 3-year price and time correction. And I think from our brokerage perspective, I think we do see value emerging in names like Galaxy Surfactants and Fine Organics and Rosari Biotech, I think from the smaller ones. So I think chemicals is an interesting one to potentially play. You can extend that to NBFCs or gold finance. I mean, Muthoot is a name we've been pushing for a while now. I think, a 5% ROA business, 20% return on equity coming to you at what, 2.1, 2.2 times, not too demanding, I think. So there is value, definitely. Yeah. I think it's been a consolidating phase, but I'd definitely be overweight on the sector. Well, I remember when State Bank of India was about 450, 500 rupees. I think I was on your sister channel and I was making a point that it had no business being there. I mean, it was so depressed. I don't understand why this discount needs to persist. I do understand that, these banks are perceived to not be run as well or more as efficiently as private sector banks. But I think Mr. Khara and his predecessors have done a remarkable job. I don't think our large cap companies are doing enough in that space. And I don't think even if they wanted to do it, they could do it organically. I think it'll have to be done inorganically. Would I buy a Persistent today in the hope of the future? I'm not sure, because valuations are very expensive. I think overall on IT services, we are cautious right now. But if these guys were to be acquisitive in the right way, then, you never know.
Okay, all right. So that's a market opinion. We need to take a short break, but we do have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether in your 20s, 30s or even 40s, the live webinar is for you. We have limited seats, so don't miss a chance. Register now, scan the QR code to register or log on to CNBC-TV18.com, and we'll see you on the 11th of May.
Welcome back, and it is all-time high for gold prices, $2,260 an ounce. I mean, we started this year with $2,050, so we are more than $200 up in the first quarter of this year as well, and the second quarter has started on a very high note yet again. So when you look at the prices, the month of March has seen near 10% of gains come in for gold. For the Indian markets, we are very close to that 70,000 rupees per 10 grams of a price. It has been a record-breaking global central buying when it comes to gold. ETFs are also buying right now, and there are a lot of reports in the global market suggesting that there is a lot of short squeeze happening in case of gold as well. The fresh longs, the institutional buying is just about started. So the kind of gains that we are seeing in case of gold can only go higher from here. Earlier, a decade or before, you could see a $50 or $100 of a gain in all of 1 year. Right now, it's $50 to $60 of a movement in an intraday market that we are seeing in case of gold. And the jump up has come in even as the dollar index is trading at a 1-month highs as well. So that is gold and silver on your screens. Another 1.5% of a gain is what we are working with in the intraday market right now. And this is happening even as many of the international markets are still shut because of the Easter holidays there. But from here, what is the sense or trajectory going forward? We will take those questions to Navneet Damani. He's Head of Commodity and Currencies at Motilal Oswal. Navneet, hi, thank you so much for joining us. First of all, on the charts, is it looking overbought at these current levels?
Well, Masha, thank you for having me on the show. Well, definitely it's looking a little overbought, and we've already seen about 8% gains in the first quarter of 24, and this has to be talked about that it's preceded by a 15% gain in the last quarter of 2023. So a total of 23-24% gains coming in the last 6 months for gold prices. This is definitely taking a lot of people by surprise, and the last $100-$150 is more of an exuberance then probably more of macro fundamentals or something that I can say probably bank it on. So technically, it's looking little overbought, but is it the end of the rally? It's little too early to say.
Navneet, we do understand that these are the kind of markets which run on momentum, which is definitely clearly on the higher side right now. So I want to talk about a forecast here as well. So most Wall Street bankers and brokerages still believe that 2,300, 2,400, some are talking about 2,500. I've read a report on 2,700 as a possibility for this year. I mean, as I said, the momentum is still on the higher side. But what is Motilal House view now on gold before we end this year?
Well, we were largely bullish on gold ever since the year started, but we would have been better off if this would have come in the third quarter or maybe fourth quarter of 2024. Coming into the first quarter has taken everybody by surprise, and most of the people are now banking on the charts which are indicating a bullish momentum towards 2,400, 2,500 in the, say, probably 1 quarter's time frame. However, I would rather probably sit back and reassess the situation, and because from my end, I think risk reward does not favor being long at this point in time. Maybe some bit of cool off or retracement, about 3 to 5% correction could give you a better entry point. At this point, we would like to stay duck and probably wait for 2,300 or 23 something to top it out.
Navneet, also, where do you see the buying coming in right now? Because global central banks have been buying, and the expectations are that by the time the first quarter of 2024 numbers are out, we would have seen stronger global central buyings as well, as we have been looking at the month of Jan and Feb, which is quite on the higher side here. Physical buying seems quite absent right now because of the kind of price movement that we've seen. ETF buying is just about started. There's a lot of fund movement happening here, but apart of that, do you see a lot of players now buying at these levels?
Well, over the last 2 years, we've seen the global central banks buying over 1,000 tons of gold. In 22, in 23, we witnessed the same. And this year's number, or probably this quarter's number, are anticipated. And as you say, it is expected to be higher than what they've done in the past. But physical demand is kind of very, very shallow. And it will take its own sweet time for the physical demand to materialize, because this kind of movement of 20-22% is not, which is easy to digest on the physical player front. So I think 70 lakh rupees per kg of gold is very, very steep in terms of mindset for the Indian consumer. So they will wait for some time before they jump into buying gold once again. And this could be a time correction, probably 1 quarter where we see people getting more mature towards this buying, or probably a time correction or price correction. Anything has to happen before some meaningful buying converges.
Oh, absolutely. So for the rest of the year, have you guys done any calculations? What is the range that now you see? Because as you are advocating caution, so obviously you are expecting some correction here. So what is the range for this year now?
Well, as I said, this is an exuberance, and how long it could rally and where it is going to end is anybody's guess. Technical parameters indicate that 2,300 or 2,330 could be a level where you could find some bit of resistance, and some cool off could be witnessed. So my bet is we could probably top out in the middle of April, and as we approach May, we could have a reasonable correction for about 7 to 8%. That could converge to about $2,100 on the lower side, where I think some meaningful buying would come.
Okay. Also, how are you looking at the silver prices? Because $25 an ounce is holding right now, but silver far away from gold really in international markets. And the Indian markets, well, yes, we are not too far away from those all-time highs. One, how would you look at this divergence, and what's your sense onto this one?
Well, it's been a very big laggard vis-a-vis gold, and I've been vocal about being positive on silver for quite some time now, but the results have not been delivered actually. We ended last year with about 1% gain in silver, and this year we are about 6% up since the start of the year. But it's kind of lacking momentum because the industrial metal pack is still not behaving the way probably it should be. One bit of missing piece is the Chinese demand is kind of little shallow at this point in time, and our bet is big on China. We expect that as we approach the second or third quarter of 24, China could be better than what they are in the last few quarters. We've seen PMI numbers better than most nations in the last couple of months. So I think Chinese demand is kind of coming back, and silver could outperform as we approach the second or third quarter of 24. But as of now, it could be in a large range of 77,000 on the higher side, 74,000 on the lower side on the domestic front, and on the international front, maybe $24 on the lower side and $27 on the higher side.
Okay. And between gold and silver, if you had to pick one, what would your better bet be?
Well, after 23% gains, I would surely be stay away from gold, but silver definitely has been one of my better picks. And maybe from a 3 to 6 months perspective, silver could give you better and more comfortable returns.
All right. Thank you so much for joining us, Navneet. So gold and silver both a buy. Mangalam, do you know that if you bought gold last year, same time, you would have bought it at 55,000. It's at 70,000 right now. So 15,000 per 10 grams of a jump up.
Now that I missed that bus, the question is if I buy it at 75,000 now, what happens next year, Manisha?
So you wait for a correction, as Navneet said. So it's expected to come down to almost 65,000 kind of levels, and then you buy.
It's expected to come down back to 55,000?
65.
65,000, okay.
I don't think we're seeing 55 ever now.
Oh, damn, Manisha. All right, that's you broke the bubble. But, you know, for everyone who's watching, they must know that you are not only advising us here in personal capacity, but you've advised everyone on our channel, and as a result of which you were awarded as the best commodities editor as well. So on behalf of the channel and all our viewers, thank you so much for enlightening us.
Thank you.
Right, with that, it's a wrap on this edition of Halftime Report. Manisha and I will continue our gold conversations. In the meanwhile, you watch Business Lunch, which will take all the market action ahead.